Time to turn on CNBC. Curling's on! Investor Beat starts now. Thanks for watching. I'm Alison Southwick. The market is up again today despite what is universally being called a disappointing jobs report. The unemployment rate fell 0.1% to 6.6%, so at least it's heading in the right direction. Joining me in studio is Jason Moser and James Early. Our top story. Apple CEO Tim Cook announced that the company repurchased $14 billion worth of shares in the last 2 weeks, most of which was part of their existing buyback program that will eventually total $60 billion. So, Jason, typically when a company buys back their own stock, they say it's because we believe our stock is undervalued, and this is no different. That's why Tim Cook said they were doing it. How should shareholders, though, dig in a little deeper?
Well, I mean, I think it's a good idea to dig in a little bit deeper because we see the headline a lot where a company will announce a share buyback authorization and everybody thinks, oh, wow, that's the greatest news ever. And really, historically, a lot of companies get this wrong. So, I mean, understanding maybe what drives the company's revenue, how they make their money, maybe what might be coming down the pipe here as far as products is a good thing to look at. Also, take a look at the balance sheet to see over time if this company has a history of buying back shares. And if they do, are they bringing the share count down? Because ultimately, that's what really creates the value, is making that share base smaller. And so Apple doesn't really have a whole lot of experience here, but I do know that these share buybacks will offset some, stock awards and whatnot, options that go to employees and whatnot, particularly executives. So there will be some dilution there that's offset by the share buyback. So that'll be something to keep an eye on. But I do like he said one thing in kind of in regard to maybe a little jab at Carl Icahn, who's kind of trying to stoke a bigger buyback. And Tim Cook said, look, we're focused more on figuring out ways to generate value for long-term shareholders, not short-term day traders, things like that. So I think that's at least a good thing for foolish investors to focus on.
Yeah, some skeptics out there are saying that this really is just a PR move to try and bolster the stock. I don't know, what did you think about this specifically for Apple?
It's okay to bolster the stock. I have no problem with that as an Apple fan myself. The thing most people miss about the buyback, I just wanted to ping off of what Jason was saying, is a buyback is not inherently good or bad. It will most end up being good or bad, but a buyback at fair value is neutral. It may boost earnings per share, but it doesn't necessarily help the value of the company. So by buying back shares at a diluted price, which probably 90% of companies don't do, Apple is actually helping. So I think Apple shares are undervalued. So I think this is a good buyback, not a dumb buyback.
All right, well, let's take a look at some of the day's movers and shakers. Shares of LinkedIn tumbled today after releasing their earnings report for the fourth quarter. While they beat expectations on earnings and revenue, forward guidance was weak. Jason, this has been a volatile stock. Do you expect it to settle down anytime soon?
Probably not. I mean, I think that what we can see for the foreseeable future is the company is still going to invest a lot back into this business to really grow that network out, scale it up so that they can take advantage of really the data that they're bringing in. They're almost up to 300 million registered users now, and there's a lot of value in those users, in us, the ones who are registered with LinkedIn. And I think that it's important to note that only 25% of their money really comes from advertising, for example. 50% and even more comes from their talent solutions, which is they're selling those licenses to companies so that those companies can have access to that LinkedIn database. So there is, I think, some sticking power there to keep people in that, to keep their customers in that environment there. But no, I mean, I think that, let's put this into context here. LinkedIn today, the market cap is about $4 billion less than Twitter. And that's after Twitter's sell-off here. But for 2014, LinkedIn's actually going to bring in twice the revenue that Twitter does. So, yeah, I think we're going to see them continue to reinvest in the business. I think that's going to mean some volatility. But I do like the company. I own shares personally. And I think that when you see sell-offs like we're seeing today, those are sell-offs that should get shareholders interested.
So you're a buyer even at today's prices?
Yeah. I think it's worth a look.
Are you my LinkedIn friend? I don't even know that.
I got to believe we're connected. If we're not,
I think so.
After we get done here, let's check that out.
I don't think you and I are friends on LinkedIn.
We'll fix that. We'll fix that. Clothing retailer Gap is up today after announcing that January sales beat expectations. Sales at Gap and Old Navy were up a bit, but down at Banana Republic. So, James, should I read into that anything that sales at the higher end price point were down 10%?
Well, big picture-wise, first, let's just step back, because a few years ago, the news would have been just somebody shopped at the Gap in the first place, and this is coming from a guy wearing a $17 TJ Maxx shirt. But shares are on a tear, and that's great for Gap. This is kind of the Applebee's of American clothing, I would say. Banana Republic a little bit higher end, but for the past year or so, Banana Republic has been kind of stumbling. So this is not so new. This is just retail. Just retail.
Activision Blizzard is up today after releasing fourth quarter earnings. Profits fell 51%, but the numbers still came in better than analysts expected. So Jason, yesterday you said going into this call that you were concerned that they were too reliant on Call of Duty, World of Warcraft, and you wanted to see some newer products from them. Did they address those concerns for you?
Yeah, I looked through the call and I think they are addressing it. So Call of Duty continues to do very well and they're figuring out ways to roll that out to consumers in China where the game is very popular. World of Warcraft has sort of stopped the bleeding, so to speak, on the subscribers that are defecting there. But I did see where Skylanders, a game that they recently introduced a couple of years back, along with a new one, Hearthstone, that is apparently generating a lot of PR there. So they are doing a good job of getting new games into the pipeline. But this is notoriously a very difficult industry in which to invest. Now, the one thing I like about Activision Blizzard, it is setting the stage here for digital distribution. They're leading the way there, and that's far more profitable. That's the direction that the industry is headed. So while I'm not really a big fan of investing in gamers or game makers, gaming companies, I think if you're interested in one, probably Activision Blizzard is the way to go.
So how does the digital distribution differ from what they do right now?
Well, that's
as a non-gamer?
That's a good question, actually, because if you think about it, for the longest time when we were growing up, James,
yeah.
a lot of times you want a new game, you'd go to the store and you'd buy the tape or the disc or whatever.
And it was the red dot chasing the blue dot across the screen.
Pretty much, yeah. Pong or Breakout or whatever. Now what they're doing is these things are being distributed. They're being distributed digitally over the internet. So instead of going to the store, you're able to go to this company's site where they have a designated site for the game, and you can get the game and additional value packs that they offer to extend the life of the game.
So I just don't have to buy the DVD or the CD.
You don't necessarily, and that's a higher margin sale.
Yeah,
higher margin sale for them. In the
floppy
disk,
disk,
which is good.
I'm that old. All right, that's going to do it for today. Let's look ahead. I want to know about one stock and one Olympic sport on your radar.
Stock is going to be Sabesp. The ticker here is SBS. This is a Brazilian water, well, they call themselves a water company, Alison, but they're really a water and a sewage company. No water company wants to say they're a water and a sewage company, but sewage is a big part of business, and who's going to stop flushing their toilet, right? You have to do it. So, and once you have sewage, you don't want to go back, So in Brazil, a lot of these developing regions get sewage. They don't undo it, so it's a very sticky business. It's slightly majority owned by the state government there. I think nothing bad is going to happen to this company for that reason. It got whacked in this emerging market sell-off, so I think it's an attractive stock right now.
All right, how about you? Oh wait, and your Olympic sport?
I'm going to go with luge or skeleton, whatever it is. With the tight outfits, and they go and they look dumb. I know they're smart people, but like the look on their faces as they're going down, like the way the head is shaking, it looks like they're contemplating some mystery, and you don't know what it is. They're just looking at the turn. I realize it. It's just how they look.
I think it's sheer terror. It's got to be sheer terror.
Maybe that's what it is. Maybe that's what it is.
I'm sorry I asked. How about you? What's your stock in Olympic sport?
A company that I know James and I both follow is Hasbro, and they will announce earnings on Monday. Now, Mattel recently came out with their earnings from the holiday quarter. It was not that great of a quarter. I think it's been a tough quarter in general for retail, and so I'll just be very interested to see kind of Hasbro's take on it, how they're working with their distributors like Walmarts and Targets of the world, and that's what I'll be keeping an eye on. And as far as Olympic sports, I think I would probably have to go with the snowboarding half pipe, because it's something that, while I'd love to try it, I don't think I ever have the stones to really try it. So.
All right. Speaking of stones, curling. Watch it. CNBC, 5 o'clock. All right. That's it for today. For Jason Moser and James Early, I'm Alison Southwick. We'll see you next week.